Hey everyone, welcome back to Corporate Decoder, the place where we unravel the mysteries of company filings. This week we're cracking open a report that looks like a SPAC trying to find its footing. And let me tell you, there are some very interesting numbers in here that tell a story. Before we dive in, if you love these kinds of deep dives into SEC filings, make sure you smash that subscribe button, and hey, we've got a great community growing on Discord, linked in the description below, where we break down even more of this stuff. So, what is the big picture here? CSLM Acquisition Corporation, or CSLM for short, has dropped its quarterly report for the period ending the 30th of September 2025. This is a SPAC, a special purpose acquisition company, which is basically a company with no business operations that merges with another company to take it public. Think of it as a placeholder for a future business. And in this report, we see the final stages of that merger process and its immediate aftermath. Let's start with the balance sheet. On the 30th of September 2025, CSLM had about $9.3 million in cash. That might sound like a lot, but compare that to the 31st of December 2024, when they had over $83 million. That is a huge drop. Where did all that money go? Well, a big chunk of it, over $18 million, is now listed under Forward Purchase Agreement liability. This is related to a deal they made to lock in future funding, and it significantly impacts their liabilities. You also see a considerable increase in share redemptions payable to over $1.2 million and deferred underwriting commissions, which remain at a hefty $6.6 million. Now let's talk about profits, or in this case losses. For the 3 months ending the 30th of September 2025, CSLM reported a net loss of nearly $20 million. That is a massive number for a company that has essentially just been managing its fundraising. And for the 9 months ending the 30th of September 2025, the loss balloons to over $22 million. Compare this to the same period in 2024, where they actually had a net income of over $437,000. This flip from income to a massive loss really highlights the financial shifts happening as they move towards their business combination. A significant factor contributing to these losses is the remeasurement of Class A ordinary shares subject to possible redemption. Essentially, as the conditions around the company's future changed, the value assigned to shares that shareholders could redeem had to be adjusted for the 9 months ending the 30th of September 2025. These adjustments alone amounted to a loss of over $728,000. This accounting maneuver can really skew the reported profit or loss figures. When we look at cash flow from operations, it paints a stark picture. For the 9 months ending the 30th of September 2025, they used nearly $241,000 in operating activities. This is a huge change from the same period in 2024, when they actually provided over $1.3 million in cash from operations. This shift indicates that the core activities of managing the SPAC, like paying expenses, are now consuming cash rather than generating it, which is expected as they prepare for a merger. The company is heavily reliant on related parties, especially its sponsor. You see promissory note related party on the liability side, with balances like $3.6 million as of the 30th of September 2025. This shows significant borrowing from parties tied to the company's leadership, which is typical for SPACs, but always something to keep an eye on. One of the most significant items here is this Forward Purchase Agreement liability, which jumped to over $18 million by the 30th of September 2025. This is a complex financial instrument, and it is clearly a major part of their financial structure, now reflecting agreements made for future transactions. The number of Class A ordinary shares subject to redemption also decreased significantly from over 1.3 million shares at the end of 2024 to just over 900,000 by the 30th of September 2025. This shows that many shareholders exercise their right to get their money back, which is a crucial part of the SPAC process as the merger deadline approaches. Now, for the big event, the report mentions that on the 22nd of October 2025, the business combination was consummated. This means CSLM officially merged with Fusemachines Inc, and the combined entity is now known as Fusemachines Inc. This is the whole point of a SPAC. The report clarifies that unless stated otherwise. The information before this date refers to CSLM before the merger. After the merger, CSLM Holdings Incorporated changed its name to Fusemachines Inc, and the original Fusemachines Inc became Fusemachines USA Inc. The company also disclosed information about various agreements, including a capital markets advisory agreement. This shows they were actively seeking professional advice to navigate the complex process of going public and merging, which is standard practice. There are also significant amounts of unrecognized stock-based compensation related to consulting agreements, totaling over $800,000. This means the company has committed to paying consultants in stock, but the expense has not yet been fully recognized because it is contingent on the business combination actually happening. Looking at the financials, it is clear that the company has been actively managing its debt and financing. The issuance of a third amended and restated promissory note shows ongoing efforts to secure funds, with a rather complex conversion feature tied to the business combination. This resulted in a loss on extinguishment of debt and a significant premium recognized in additional paid-in capital, indicating sophisticated financial maneuvering. The company's liquidity situation is a major concern. As of the 30th of September 2025, they had very little cash left, around $9,000, and a huge working capital deficit of over $37 million. This highlights the critical need for the business combination to be successful to provide the necessary operating capital. The report explicitly states that these conditions raise substantial doubt about the company's ability to continue as a going concern. This is a serious warning sign. The company also gives us a look at its fair value measurements. The marketable securities held in their trust account are valued using observable market data, placing them in level 1 of the fair value hierarchy. However, that forward purchase agreement liability is a different story, classified as level 3. Meaning its valuation relies on unobservable inputs and significant management judgment. This shows complexity in how they're accounting for these newer financial instruments. Now let's put on our investor hats and see what this all means. CSLM, like many SPACs, went through a period of holding cash and funding its operations through related parties while searching for a target. The massive losses reported in 2025 are largely due to financial engineering, like the financing expenses and the fair value adjustments of liabilities rather than operational failures because, well, there were no operations. The success of Fusemachines Inc. now hinges on its ability to execute its business plan post-merger. The company's direction seems to be focused on technology and innovation, but the significant debt and the company's prior struggles to maintain liquidity as a SPAC present considerable risks. The biggest opportunity is if Fusemachines Inc. can deliver on its promises and grow rapidly, justifying the complex financial maneuvers that got it to this point. The weakness lies in its past as a cash-burning SPAC and the lingering questions about its ability to translate its technology into sustainable profits. Alright everyone, that is our breakdown of CSLM Acquisition Corporation's latest financial report and the key moments of its business transformation. What do you think about these numbers and the path forward for the newly formed Fusemachines Inc? Let us know in the comments below. If you found this analysis helpful, please give this video a thumbs up and subscribe for more in-depth looks at the corporate world. And do not forget to join our Discord community for more discussions and insights just like this. Thanks for watching, and we'll see you in the next one.